Good morning everybody and welcome back to episode 142 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. If that sounds like something you'd be interested in, then please subscribe to the channel. I put out a new video every 12 hours. So the story of the morning is an article I've found on Crypto News, and it's written by Joel Frank and it's titled "Bitcoin addresses with non-zero balances could soon hit record high and what this means for the Bitcoin price." So usually we don't focus on price on this channel because it's just kind of vacuous and meaningless really. It doesn't have anything to do with the technology, it doesn't really have anything to do with Bitcoin. It's just the dollar value basically of something. Doesn't correlate to any real world value. As far as utility is concerned anyway. So let's jump into the article and we'll see what it's about. So according to Glassnode data, the number of Bitcoin wallet addresses holding a non-zero balance could soon hit an all-time high, with the latest price rally that has seen the value of the world's largest cryptocurrency jump nearly 40% this year, seemingly drawing in new investors. According to the crypto analytics firm, there were 43,525,000 Bitcoin addresses with a non-zero balance on the 2nd of February. That's nearly 300,000 up versus this time last month. The record high number of non-zero addresses of 43 million was hit in the immediate aftermath of the collapse of what had formerly been one of the world's largest cryptocurrency exchanges, FTX, last November. At the time, this triggered a rush to withdraw crypto from exchanges, with many Bitcoin owners seemingly creating a self-custody wallet for the first time. However, capitulation as prices fell over the course of the following month resulted in non-zero address Bitcoin wallet numbers quickly declining back to their pre-FTX collapse levels. For anyone who just doesn't know, I mean, it's pretty self-explanatory, but a non-zero Bitcoin address is a Bitcoin address that's been created that has some Bitcoin on it. Even a tiny amount, what we call like a dust amount, would still be counted in this. And it's important because it represents real world adoption. Somebody has sent Bitcoin to that wallet, and so it means it's a real. You can use that figure as a real world sort of representation of adoption, basically. But the recent recovery in non-zero address numbers suggests that amid Bitcoin's impressive rally since the start of the year, investors are once again returning to the Bitcoin market in greater numbers than they are leaving it. If the number of non-zero wallet addresses continues rising at the pace it has over the last few weeks, a new all-time high could be hit by the end of the month or by early March. Despite the bear market of 2022, the number of non-zero Bitcoin addresses continued to steadily rise. However, in past bull market cycles, such as in the run-up to the 2017 peak and in late 2020, early 2021, the pace of new non-zero address creation has been much higher. In the absence of sustained rapid growth in the number of non-zero wallets, an indication that new investors are entering the market to pump prices, Bitcoin may struggle to gain further ground. Bitcoin bulls will thus be hoping that the latest rise in non-zero address numbers represents the start of a sustained increase, and that the prospects of Bitcoin being in the early stages of a new bull market will continue attracting new buyers. Indeed, multiple separate on-chain leading indicators are all flashing bullish signs. As discussed in a recent article, 7 out of 8 key on-chain and technical indicators tracked by crypto analytics firm Glassnode's recovering from a Bitcoin bear are now signaling that the next Bitcoin bull market might be here. Glassnode's dashboard analyses whether Bitcoin is trading above key pricing models, whether or not network utilization momentum is increasing, whether market profitability is returning, and whether the balance of USD denominated Bitcoin wealth is in favor of the long-term hodlers. However, things could be bumpy for Bitcoin in the near future. Bitcoin initially rallied in wake of a not as hawkish as feared Fed policy announcement on Wednesday, but a super strong just realized January US jobs report has rekindled bets that the US economy may ultimately avoid recession this year. That might mean the Fed lifting interest rates higher for longer, a prospect that could trigger some short-term profit taking in Bitcoin. So good news this. We're getting quite a lot of good news recently. In the last few days we've had Bitcoin price going up, we've had this, we've had criminals getting caught, all kinds of stuff. So it's been a good few days. Another metric to look at as well, what's I think is always a good one for adoption. So obviously this non-zero number of non-zero balance wallets is a good one to look at. Another one to look at is how much Bitcoin is actually leaving exchanges. If you've got an account with Glassnode, or if you use Glassnode at all, they do a lot of on-chain analytics, and you can see exactly the incomings, outgoings of all kinds of different metrics. Whatever you want to look at, you can find it on there. And a good one is the like I say, the amount of Bitcoin actually leaving exchanges is people who are buying it Bitcoin and then moving it off into cold storage or into into a wallet that they custody, and that's always a really good sign. I always think is a really healthy sign, and that peaked last year, so we may see that see that again hopefully this year. So that's what I've got for you this morning, guys. Thank you for watching, thank you for listening. Just remember, everybody, to please subscribe to my channel, join my team, and I'll keep you updated on all things crypto every 12 hours. Don't forget to smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.